Hey there, everyone. This is Dave Keller at StockCharts.com, and welcome to Behind the Charts. This is where we get to pick the brain of successful investors, traders, educators, and understand how they learned to apply the technical toolkit to their process. And today's a really cool conversation with Josh Belanger. Josh is the founder and managing director of CounterVest. I sat down with Josh a couple months ago at a Money Show event, and what was interesting about my conversation with Josh, he actually started as a runner on the floor of the CME, the Chicago Mercantile Exchange. The floors in Chicago I used to love going to early in my career when I was with Bloomberg. I got to spend time at the CME and the SIBO and other places, and you talk about the fear and greed of investing. That was the place. That was the petri dish of fear and greed and the emotional drivers of investment decisions. But these traders, these men and women in the pits had ice in their veins. And so talking with Josh, it's amazing how calm and focused he is for someone who got his starts at the pits in Chicago. We talked a lot about a framework and the importance of a framework, especially when you're investing in options, which I think is a place where some investors can get into trouble because you're getting into some areas of complexity and areas of the market you might not be as familiar with. So I thought my conversation with Josh really drove home the value of learning effectively before you trade and the importance of having a proper framework. So here's my conversation with Josh Belanger from CounterVest. Hey everyone, we're here at the Money Show in Orlando, joined now by Josh Belanger. Josh is the founder, managing director of CounterVest. Josh, thanks so much, I appreciate it.
Thank you.
So you are coming in town from Chicago, and I wanted to ask you about your background. I know that you spent time on the floor, and I feel like that is an experience that too few people are experiencing now. I'd love to just hear about what that was like as a formative, introduction to the markets. Can you tell us about that period?
Yeah, so I'm young, young. I've been doing this for 15 years. So okay. Luckily I got the opportunity and life throws you curves. So yeah. I wasn't sure what I wanted to do in life, and I was delivering pizzas. And one thing that you don't know is I was training to be a professional wrestler.
No kidding.
So that was my ultimate dream.
Wow.
To be a professional, like Hulkamania. But
this is a new answer to the question.
It's a new answer, yeah.
First.
It's a little curveball.
Okay, good.
I'm skinny.
Yeah.
I look young. So it was either steroids and a lot of time on the road. So I was delivering pizza, and a couple doors down was a Edward Jones office. And my boss one day said, if I wasn't doing this, I'd be a stockbroker. And that's what clicked. Now, I'm 18 years old.
Right.
I don't know anything about the market.
Yeah.
But I know that Russ was the Edward Jones guy.
Right.
A couple doors down. I went to him and I asked him, I said, one day, I'd like to be a stockbroker. Can I, how do I get started?
Right.
He's like, do you have a book of business? And I'm like, no. He's like, do you have a Series 7, which is a industry license?
Sure.
I'm like, no. He's like, well, you're going to need to get those.
Start there.
Start there. Yeah. I'm like, okay.
No problem.
Yeah. He's like, I used to work on the floor of the Mercantile Exchange.
Right.
And I think that's your best opportunity.
Interesting.
And from there, I cold called every place. But he said to me, but I don't know anybody.
Yeah. You're on your own.
You're on your own, which was enough information for me. Yeah. Because I'm like, okay, well, sure. He's like, I don't know anybody, but that's your best opportunity. And I'm like, okay, that's my door. That's how I'm going to get there.
Yeah.
So I was given the opportunity to interview a couple times, and I finally got a job as a runner on the floor.
Good for you.
And that was my in. And looking back on it, I look at it as like learning a trade.
Yep.
As if a carpenter started as an apprentice and built their way up.
Yep.
And luckily, because of how life was at that time for me, that I had that opportunity to be able to grow that way.
Sure.
And get started in the business.
And so what years were you involved in the floor about?
So the 15 years ago, that was in 2004 or 5.
Okay, got it. Right. And so what roles did you play? You were a runner. Was that your main goal? Did you do other things on there? Or what was the experience like?
There's a buzz that you get on the floor that is nothing else can live towards it. When I got off the floor, I always miss it, and I still miss it. One thing that I learned on the floor was that every day is a new opportunity. So those traders came in, no matter what happened the day before, it was opportunity. And that was the one thing that I loved about the floor, and I also learned about the markets, is that every day the bell rings, there's a new opportunity. I look at life as well.
Yeah.
But as a runner, the janitor had more pull than I had. Essentially, you just have to...
You're the lowest of the low, right?
You keep your mouth shut. You have to make sure that you're not in anyone's way. Yeah. You got to push through people,
Yeah.
and people will push, purposely at that time that they're busy,
Yes.
the pits were,
Yeah.
and they elbow you and so forth and give you a hard time.
Right.
And you have to get the tickets, which they trade on, and you
Yep.
have to take those tickets, take them to a clearing desk,
Yeah.
and then keep doing it all day long.
Over
So
and
you're
over.
going
Yep.
in pits and fighting people and so forth. But that was my opportunity. That's how I was able to get my foot in the
fantastic.
door.
That's great. The CME floor was seeing different trade floor, that was just the most beautiful facility. I miss seeing that. It was just a gorgeous place.
Well,
it's very cool.
The biggest pit was the euro dollar.
That's right.
And a lot of people are not familiar with the euro dollar,
Yeah.
but in the futures market, that was like the busiest.
That's
that was
the
like
one. Yep.
That was the one. And then
Yeah.
the next one would be the S&P.
Sure.
And then the NASDAQ.
Yeah. So one of my first experiences on the floor of the CME, I was with Bloomberg at the time. So I would visit some people. And I'll never forget a guy that was hand drawing point and figure charts, sort of tracking the market. He would go over and kind of track it. So I'm curious, did you have any exposure to charts or technical analysis? Did you see any of that while you were on the floor? Or at some point, did you have any exposure to that during your career?
Being as a runner,
Yeah.
you got to see a lot of tickets. Now, at first, I didn't understand what a tick was or what was going on.
Yeah.
But one of the other individuals as a runner as well was starting to tell me about like, hey, this guy was up $1 million. This guy's up 100,000. This guy's down $1 million.
Yep.
So you start to look at that stuff and you start to see how they trade. And we talked a little bit about the presentation I'm going to do a little bit earlier, or a little bit later.
Yep.
That one thing is what we're going to talk about is one thing that I learned from the floor was that they manage their positions without them knowing how to manage their positions.
Okay.
So a lot of times, I don't know if you witness this as well, is that they're interacting with orders.
Sure.
So they're buying and they're selling, they're buying and selling, they're buying. They're active.
Right.
They're not buy, hold, or buy, manage, and hold.
Yes.
A lot of times.
Yes.
And that was one thing that I picked up on is that you had certain people doing X's and O's, and you had other people just local traders, which are locals or traders who traded for themselves out of their own account.
Sure.
And they were on the outside, and they would watch certain people at some times, and they would go in, and when that guy got in, so there was all kinds of different approaches. But a lot of times you'd be surprised. I tell people, I mean, like financial technology is we refer to it as legacy technology. You go on the floor, I mean, like the computer systems are not like, they're 20 years old.
I was going to say, it's not cutting edge, right? Yeah.
So that's why the guy is probably doing the X's and O's.
that was the best, right? That was the best he could do.
Point and figure
Isn't that
charts.
funny? Yeah.
But yeah, I mean, some people were able to do math a lot quicker, especially on the options exchange.
Sure.
The SIBO.
Yeah.
I mean, you had to be able to calculate as a trader interacting with that order flow, what the deltas were, and be able to do all that. Futures market, which was the CME, as you know, much different on how you had to calculate or figure out a way to make money.
Right.
But the edge there for a lot of people was that they're market makers. So they're just making a market. And they had a wider spread, and then technology came in and made markets a lot tighter. And
got
rid of them.
So that was your time on the floor. Now you're at CounterVest. Can you tell us about what you're doing now? What does your role look like now?
Yeah, so I left that financial world.
Okay.
And then I wanted to trade for myself.
Okay.
And this was in the financial crisis. So ultimately,
good timing.
Perfect time. So I was working on a trade desk, and I was actually wanting to manage money for clients. And it wasn't the best time to start doing that.
Yeah.
So I started, one of the things I had learned in the transitioning from getting on the floor and working in the industry and so forth was a lot of people didn't understand leveraged products, futures, or specifically options.
Sure.
So I was a junior broker at one firm, which was cold calling 600 dials a day. I got my dream of being a stockbroker, which I realized I didn't want to be a stockbroker or an advisor.
Right.
But I would often tell people, you got to sell yourself. So to make yourself different, they told me, like, why don't you use your floor experience to talk to these individuals?
Right.
So I would interact with client or potential clients or leads.
Yeah.
Everyone said options are risky or all this. So as I finally got my Series 7, and I took the options test and I passed, it was the best I did because everyone said, you got to make sure you focus on options. And I'm like, okay. So as a professional with my new Series 7, just like Russ told me, I'm like, man, I got $2,000. I'm going to make some money. Well, I lost that $2,000 in 3 days.
That was quick.
Then I realized, I don't know, being a stockbroker and also that learning how to make money from the marketplace this way is going to be that.
Sure.
So I started learning about how to actually doing it for myself and why I wanted to get away from the financial services industry.
Got it.
And start teaching and providing that information to just ordinary investors, because as talking to them, they just didn't understand. They didn't know.
Right. Interesting. So there's that gap. And so your role with CounterVest is actually empowering individual investors.
Yeah.
That's fantastic.
I have a pretty simple line.
Okay.
Get rich and learn a thing or two along the way.
That's fair.
Yeah.
That works.
It really sums it up. I mean, we can pizzazz it all we want of like,
yeah.
But ultimately, people want to make money from the marketplace. That's what we want to do. We all want to make money from the market. And a lot of people, I mean, it takes a lot of time.
Yeah.
My way, starting on the floor,
you
got to learn a trade, and it takes time. Do you want to take, people don't have that time to be able to do that.
Yeah.
You got to make money now.
Yeah.
And maybe learn a thing or two along the way.
So can you give us just a little window into what your process would be? Let's say I come to you and I'm just trying to get my hands around my own finances, trying to get rich and learn something along the way. What do you start with? How do you start someone along that path?
Everyone comes in at different levels. So what we have right now, I put together kind of like a stock portfolio, and we call that Wealthy Tech Investor.
Okay.
So we're trying to find smaller stocks that are up and coming, and we have a presentation. I'm really excited about 5G right now. So that's kind of how I get people in.
Got it.
And then we start to introduce them to options by selling a covered call, just to kind of.
It's a nice introduction, right? Yeah.
Just to kind of like, hey, here, and show them, like demonstrating, like here's what we can do.
Yep.
Because a lot of people are just taking that step from, hey, I want to make, or I've traded a stock once or a couple times, to trading options. That's a big leap.
It's a big jump. Yep.
Even though I provide that in services, it's still a lot, to open up what's an option chain, and so there's nuances that go into it. So we're trying to introduce them and get people introduced that way. So starting out with something that they know, and then building on from there to more advanced services like providing like hot buying calls or buying puts and trading.
When people get further along their journey and they start being a little more nimble with options, what sort of mistakes do you see people make that prevents them from really being successful? Anything come to mind?
Framework,
okay.
Yeah, with options, you can make a lot of money.
Yeah.
Well, I don't want to say like make a lot of money, have big returns, but then the losses as well are, people trade products the same. As you are aware on the floor, future products trade differently than option products trade. So, that individual that was doing the point or the chart, that process may work for him on that type of product.
Right.
But if he tries to take that approach and do it on the options market, or to a Forex market, or just a different market, it's different because the data is different, the products trade differently. It's a different vehicle all in one. So a lot of people try to take like what they learned from stocks and move it into options.
I see.
And it's not the same.
It's not the same.
It's not the same. Options are volatility products.
That's right. I'll never forget the first time I met someone who had traded on the options floor, and I was thinking it was very technically oriented, but he was showing me a big table of numbers. He was showing me all the Greeks. I mean, he was really just trading volatility, and it clicked to me how important those measures were. I mean, that was really the game, I think, for them, right?
Well, those matter when you get to a bigger scale as a fund. As an ordinary investor, you just need to know that they're volatility products, and that's what moves them.
That's right.
There's just no way to make it anything else but that. But if you understand that, you could say the same thing to like a penny stock. It's a volatility.
That's right.
But there's nothing wrong with volatility. It's just understanding that that's the product.
I think that's great.
That's the vehicle that you're using.
And it's an awareness of it, I would imagine, more than anything. So we're recording this early February 2020. Stocks at or near all-time highs. Pretty much anything I could list out feels like it's at or near all-time highs. It's sort of it's been this bullish run. What are you seeing right now based on your toolkit, looking at the options market? What are you seeing? What are you thinking for the next, going forward here? What do you see things with?
Very complacent. But on Friday we did close, and we're right at those same highs that we were in January.
That's true.
So if you look at the volatility index, which the measurements are, a little off. But we're above 15.
That's right.
And previously we were at 12.
Right.
So there's still concern right now because of the coronavirus and something coming up. So the market's still a little shaky.
Yep.
But really, overall, it's complacent.
Yeah.
The reason why it's complacent is because money goes into the system. there's no reason, there's no fear
Yeah.
in the marketplace.
Yep.
And money continues to flow into the marketplace. So, I mean, why swim against the tide at this point?
You know, you mentioned complacent. It hits me, the AAII rankings, right? Individual investor, it's almost dead even bulls and bears right now. I mean, exact split between the two. So there's no real overwhelming bullish or bearish sentiment, at least based on that either, right?
I think there's a lot of disinterest, honestly.
Yeah.
It's just
disinterest is a great way to describe it.
I think the political environment has distracted people from their money a little bit.
Yep.
And I think that's where the attention's going. Is just, Democrats and Republicans.
Yes.
And not the money part.
So given this sort of disinterest, given this complacency, let's say you had new money to put to work right now, where would you start to look to allocate it? How would you think about it right now?
I wouldn't take clients.
Under the pillow, right? Wait and see, huh?
Well, because you have to take it and you got to put it to work.
That's right.
There's some technology. I mean, you got to be engaged some way.
Yeah.
And how I would be engaged would be different than a kind of a client, but it's hard to say, like, you got to put money right here. If I'm on the line and my reputation's on the line, I mean, sure, people can do it, but I don't know. From our wealthy tech portfolio, we've trimmed quite a few positions off.
Got it, okay.
One of the new ones we put in was Zoom. That's an interesting one, Pins. I mean, there's some interesting ones, but the type of returns that we saw in 2019, like on Roku or some of these other names, how could you back to back? And if it does, then, I mean, there's an old documentary that I've seen with Kobe, and it was with Spike Lee.
Right.
And they show a game and he's mic'd up, and then they have him afterwards and they're talking about it.
Right.
So one of the scenes, it's about, he's shooting it, and Spike Lee asked him something like on the lines of like, when you miss a shot, do you ever think about that? He's like, no, because I know I'm going to miss the next one, or I'm going to make the next one.
Yeah.
And he's like, if I miss that one, then I know I'm going to make the next one after that.
I love that.
So it almost on opposite is like, if it doesn't go then definitely it's going to go. Yeah. It's going to go lower. We could see something like Japan. I think that's eventually how it pans out. But it's an interesting marketplace. Yeah. It's really interesting on what's happening.
Truly wait and see mode, it feels like.
It's tough for individuals as well that are on fixed income.
Sure.
Like the assets have increased in value. Yeah. It's part of the other presentation I talked about is that the values before stocks had to split. They're not splitting anymore.
That's
They're
right.
not appealing to the mom and pop investor anymore.
Right.
Amazon's at $1,800. I mean, like, what investor can get a diversification or get an asset and have enough money to get yield?
Yeah.
They can. It's just, it's so much. There's a little bit amount of money that they have, and everything's kind of gone in the other direction.
That's right.
To inflate stuff, but I mean, it is what it is.
This was great, Joshua. If people want to learn more about you and your work, where can we point them for you?
CounterVest.com.
CounterVest.com.
Yep.
This was such a pleasure, Joshua. Thank you so much.
Thank you very much.
Here with Joshua Bellinger from CounterVest here at the Money Show in Orlando.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.